Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have a ton of things to get to today, especially with this week's WASDE report. But to kick things off, let's start and recap what happened this week on the markets.
Well, we can start, I think, on the cattle side, and it was a very tough week in terms of especially futures prices for cattle. But cash-fed cattle prices, we'll call them down $2 for the week. When we look at feeder cattle prices for the week, we'll say they're 3 to 10 lower. When you look at what's been happening on the futures side, we did have limit down moves this week in live cattle and feeder cattle markets. We were down about over $7 in many of the live cattle futures contracts, while down over $8.50 for the week on many of the feeder cattle futures contracts. So pretty tough week when you look at what's been happening in cattle markets. The choice beef cutout was down $3.18 for the week. I like to remind us that that's the first time that we've seen the choice beef cutout below $2 since February 24th of this year. And when you look at the choice select spread, it has narrowed immensely in the last several weeks, back to levels that we hadn't seen since early 2017 as well. On the hog side, cash hog prices were down a little more than $1 for the week. We also saw the pork cutout value that was down $1.77 for the week. That was really led by what were lower belly prices. Belly prices for the week ended up down $6. Yet when you look on the future side, a very different situation on the hog side. We were actually up a couple dollars on hog futures for the week. So a little different picture for hogs than what we saw in the cattle markets this week.
And definitely interesting to watch that belly market this week. There was one day where it dropped over $9, and we've seen it crawl back and climb out of that hole a little bit.
Yeah, absolutely. I mean, when you talk about bellies that have been at or near record prices for a period of time, a little bit of additional supplies coming on the market seems to make a lot of difference in where those belly prices go day to day.
Scott, I want to touch a little bit on that cattle side of things. Have we hit our peak? Are we starting to back off those numbers? And maybe do we need to settle into this range a little bit more?
Well, I certainly think it's been a tough week when you look at where cattle futures have gone, and I think when you look at the last 2 to 3 weeks, especially on the future side, we've continued to see lower cattle prices across the board. It just reminds us these large runs of cattle and what many think are going to be very large supplies as we look ahead are beginning to put a lot of pressure on futures markets. We'll wait and see as we go through the remainder of 2017, what that really means when we look at all the pieces of the puzzle in cattle markets. But certainly seems to me seasonally we're going to see some lower prices as we move ahead. And let's hope we don't test the lows that we saw in the fall of 2016, but it's not out of the question for us to get there fairly quickly when we've seen what markets have been doing the last couple of weeks.
On the flip side of that, Farrow-to-finish returns were released this week from Iowa State University, and really it shows a lot of potential on the hog side of things.
Yeah, absolutely. When you look at the July numbers from Iowa State that they released this week, $7.63 per hundredweight returns to Farrow-to-finish operations. That's much higher than any of us would have ever expected. And when you really look at what's been happening, we may be on track for 2017 to be the second most profitable year we've seen in the hog industry since 2006. But both stronger hog prices, as we saw demand both domestic and international be stronger this year, as well as relatively cheap feed expenses, has given us some very good profitability numbers. But many of us would have said early in 2017, there's no way we would talk about this year as the second most profitable since 2006.
The big news of the week, WASDE update. As we take a look at that, it shows some big surprises on both the cattle, or on the corn and soybean side of things.
Yeah, absolutely. When you look at where USDA came out for corn yields, number one, they were much higher than many of us or many experts would have predicted prior. I heard a lot of 166 yields on the corn side prior to USDA's release, where they pushed us back above 169 on corn yields. So now a midpoint corn price range of 330, and weakness in futures markets for corn as we went through this week just reminds me from a meat perspective where we're likely going to be able to feed relatively inexpensive corn and soybean meal for the foreseeable future. And even on the soybean side, where USDA raised the soybean yield estimate, given their first look at survey results on yields, tells me that soybean meal prices will also maybe be fairly attractive for the coming months ahead.
If input costs are lower or feed costs are lower, does that maybe signal some expansion on maybe the hog and poultry side of things?
Yeah, I think when you look across the board, we're certainly longer term going to have, all else equal, more chicken, more pork, more beef than we would have had otherwise. Now that longer term may be out there several months or perhaps a couple of years down the road, but even in the short term, the idea of all of a sudden I can feed a little cheaper feed. I might decide I want to feed these animals a little heavier than I otherwise would have to maximize profitability. I don't know if that's what we really need as we end 2017 here. Cattle slaughter weights have run about 20 pounds below year-ago levels here of late. If those start to snug up relative to where we were a year ago, I think we could talk about more pressure on cattle prices with just the additional beef supplies coming on the marketplace. Even on the hog side, although we've come back closer to year-ago levels, if we start talking about higher hog weights and we talk about additional pork supplies, I think that could be more troubling for pork prices longer term as well. So there are both short and long run issues of feed prices being cheaper than we would have thought prior to this August WASDE release.
Does it also put a little bit of pressure to get those pork plants that are coming online at capacity sooner rather than later?
It does. I think when you look here for the remainder of 2017, we have one issue here in the short run that, at this point, we're pretty much fixed in terms of the number of pigs that we're going to be hanging in the latter part of 2017. So getting some of these new plants at least partially online is certainly going to be necessary to get through these larger runs that come in 2017. But when we get into 2018, that's where I think we can even see even larger runs of hogs in the last part of 2018. That requires not only are these plants coming online, but they're at much closer to full capacity. And in 2018 could potentially be one we have to deal with more critically than 2017. So we'll wait and see how that all plays out. But we're going to have more hogs to hang in 2018, that's for sure.
Shackle space will definitely be at a premium.
Absolutely. And the last time we don't have a shackle space to hang a hog on is the time that hog prices will be much lower.
Scott, we talk about the importance of demand, both domestically and internationally. And as we take a look at the monthly trade data that came out this week, U.S. meat products sure are in high demand.
Yeah, my goodness, we've had a very strong start when you look at the first half of 2017 meat trade out of the United States. And the June data that we got this week only continues to confirm just how strong exports have been. When you look at the beef side, June beef exports were the largest thus far monthly of 2017, reaching about 110,000 metric tons. That's an 11% increase relative to a year ago. And it's the largest June total on the beef side since 2011. When you look at the January through June, so let's look at the first half, beef exports up 12% in volume, 15% in value. So, we're not just pushing a lot more product out at lower prices. Those prices have held very nicely, and we're getting a lot of value growth as well as volume growth. So it's very good news on the cattle side. We can say the same thing on the hog side. Pork exports right at 200,000 metric tons in June. That's 6% higher over a year ago, and it's the largest monthly June volume on record. So it very good on the pork side as well. When you look at the first half total, we pushed about 1.25 million metric tons of pork outside the United States. Mexico continues to be a very important market when you look at pork exports. For June, 19% higher on a volume basis year over year. So all in all, it's been one of the very bright spots that has helped us when we've been increasing domestic meat supplies.
And hopefully that remains top of mind as they get into those NAFTA renegotiation talks about how important those markets play for U.S. ag goods.
Yeah, all going to be very important from a trade standpoint. I also remind us all the time, avoiding disease events in this country that might shut off trade become very, very critical. When you think about the strong growth we saw in the first half of this year, all of a sudden having some disease outbreak that causes countries to turn away from us. That's not the news we need to hear right now. So we need to be very vigilant about what we're doing on that side as well.
Scott, anything else?
That's it for this week.
All right. Well, we will see you next Friday, and make sure to tune in. Scott and I'll take a closer look at retail prices, the consumer confidence numbers, and the continued strong demand for high-quality U.S. beef. We have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com, and for market updates twice daily, check out John Perkins' Market Minute. I'm Megan Grebner on Brownfield.